Wall Street has always reinvented itself when the money shifts, from railroads to dot-coms, from mortgage bonds to fintech, and now in 2025 it's happening again. After a few rough years marked by deal droughts, layoffs, and regulatory headaches, Goldman Sachs is staging one of the biggest profit comebacks in the finance world, powered by a bold internal transformation it calls 1GS 3.0. At its core, this strategy isn't about risk-taking, it's about reinvention. By combining artificial intelligence, automation, and ruthless cost discipline, Goldman is turning a 155-year-old investment bank into a lean, tech-driven machine, one designed to thrive in a slower, smarter financial era. This is the inside story of how Goldman Sachs 3.0 is redefining what profitability looks like on Wall Street. 1. The comeback context, from chaos to control. Not long ago, Goldman Sachs was on the defensive. The pandemic boom had faded, deal-making dried up, and the firm's high-profile push into consumer banking, like its ill-fated Marcus project, burned billions in losses. Profitability fell to decade lows, and analysts started asking if Goldman had lost its edge. But 2024 marked the turning point. Under CEO David Solomon, the firm began dismantling its weakest businesses, doubling down on core strengths and rebuilding for the next generation of finance. The result? A leaner, smarter Goldman, engineered not just for growth, but for durable profit. 2. The 1GS vision, a single, smarter Goldman. For years, Goldman was famous for its silos, investment banking over here, trading over there, asset management somewhere else. Each unit made money independently, but that fragmentation also meant duplicated costs and missed synergies. 1GS changes that. It's about unifying data, technology, and client relationships under one digital roof, giving the firm a 360-degree view of every client, transaction, and opportunity. In practice, that means a corporate client can now access deal advisory, financing, and risk management seamlessly through one Goldman interface, powered by AI analytics that anticipate needs before they arise. One firm, one system, one data stream. That's Goldman Sachs 3.0. 3. AI becomes the new analyst. At the heart of this transformation is AI, not hype, but hard integration. Goldman now uses machine learning models across nearly every division. Investment banking, AI scans market data and company filings to identify M&A targets faster than human teams. Trading, algorithms optimize order execution and liquidity strategies in real time. Wealth management, personalized. AI Copilot suggests portfolio adjustments based on client goals and market shifts. What used to take teams of analysts now happens instantly, cutting costs and unlocking higher margin insights. The goal isn't to replace humans, it's to make every banker and trader superhuman. 4. The return to core, banking, trading, and asset management. Goldman's new strategy has 3 words written all over it: focus and efficiency. That means doubling down on what it does best, advising corporations, managing capital and trading markets, while trimming or exiting distractions. The firm quietly scaled back its consumer lending unit and shifted that capital into asset and wealth management, where fee income is predictable and scalable. Meanwhile, trading, especially in fixed income, currencies, and commodities, is once again one of Goldman's biggest profit engines. It's a return to fundamentals, but reimagined through the lens of data. 5. The cost crusade, leaner, not meaner. Goldman's leadership realized something uncomfortable. The firm was bloated. Too many middle layers, too many overlapping systems, too much bureaucracy. So they cut, decisively. Hundreds of back-office positions were consolidated. Legacy systems were replaced with cloud automation. AI tools now handle compliance checks, document review, and transaction reconciliation, reducing costs by hundreds of millions annually. It's what Solomon calls strategic simplification. Every dollar saved adds straight to the bottom line, and Wall Street has noticed. 6. The rise of the digital banker. Inside Goldman, the culture is shifting. The firm's new hires aren't just finance grads, they're coders, data scientists, and engineers. The modern Goldman banker doesn't just pitch deals. They analyze trends with real-time data dashboards, build custom financial models on demand, and use predictive AI tools to forecast outcomes. This isn't the suit and tie Wall Street of the past. It's Silicon Alley meets Wall Street, with Goldman at the intersection. 7. Asset and wealth management, the quiet cash machine. While trading and advisory grab headlines, Goldman's most consistent profits are now coming from asset and wealth management, AWM. This division manages over $2.7 trillion in assets, with fees flowing in every quarter, regardless of market volatility. But the real innovation, AI-powered portfolio optimization, software that constantly rebalances client portfolios using predictive risk analysis. This allows Goldman to scale personalized wealth management to millions of clients at once, turning what was once a relationship business into a high-margin, tech-enabled growth engine. 8. Deal revival, M&A is back. After 2 sluggish years, global M&A activity is rebounding and Goldman is reclaiming its title as king of the dealmakers. But this time, it's not about size, it's about speed and precision. With iTools scanning industries for undervalued companies and acquisition synergies, Goldman can pitch deals before rivals even spot the opportunity. The result? A resurgence in advisory revenue, leaner teams closing faster, smarter deals. The firm has learned to make more by doing less. 9. Risk, regulation, and reputation, the balancing act. Goldman's aggressive past often brought scrutiny, but in its 3.0 era, the firm is embracing transparency as a profit strategy. Compliance automation reduces errors. ESG reporting tools give clients clear sustainability metrics, and tighter internal governance has restored investor confidence. The message to markets is clear. This isn't the risky Goldman of old. It's the disciplined Goldman of the future, built on precision, data, and trust. 10. The takeaway, Wall Street's new blueprint for profit. Goldman Sachs 3.0 isn't about more risk or more leverage, it's about more intelligence. By uniting data across divisions, embedding AI at every level, and enforcing cost discipline, Goldman has rediscovered what made it legendary in the first place, the ability to adapt before anyone else. The lesson for every business leader? Profitability in the modern era doesn't come from scale alone, it comes from efficiency, insight, and integration. Goldman's next $1 trillion won't be built on speculation, it'll be built on systemization. Because in finance, as in every industry touched by AI, the firms that win aren't just the ones that work hard, they're the ones that work smarter. And Goldman Sachs 3.0 has just proven that the smartest firm on Wall Street still knows exactly how to make money.